Welcome back. As always, I hope you had a great day. Today was a tremendous day for the market, as all U.S. indexes were up more than 1.5%, building on this week's gains as more states eased stay-at-home orders. The Dow had the worst day, being up 1.52%, while the S&P was up 1.67%. The best day came from the NASDAQ, as it posted a gain of 2.08%. Today's move has put the markets up more than 3% on the week, and the S&P 500 closed at its highest level since March 6th. Tech giants Facebook and Amazon both hit fresh all-time highs today, as Facebook ended up 6%, while Amazon ended up around 2%. Facebook's gains came as investors cheered the company's new Facebook shops, while Amazon continues to benefit from customers ordering online. A.B. Bernstein believes Facebook shops could unlock a $1.3 trillion market, while Morgan Stanley said Facebook's leading reach can make Facebook a competitor to both Amazon and Alphabet. Chinese stocks took a hit today after the Senate passed a bill that would increase oversight of Chinese companies. The bill would also ban some Chinese companies from listing on U.S. exchanges. The bill was just passed after President Donald Trump had tweeted earlier in the day, quote, "Some wacko in China just released a statement blaming everybody other than China for the virus, which has now killed hundreds of thousands of people. Please explain to this dope that it was the incompetence of China and nothing else that did this mass worldwide killing." Looking at our table, the great day in the market was apparent, with small cap stocks leading the way. Taking a look at sector performance, it is apparent that oil and gas had a tremendous day, ending the day up more than 3.9% as a whole. Oil prices ended at a 10-week high, with WTI crude being up 4.88% as domestic crude supply dropped by 5 million barrels. Again, the US dollar lost strength as investors and traders fear US and China tensions. The stock that moved the most in the S&P today was MGM Resorts. The casino stock moved up by more than 8% on Wednesday as casinos and hotels around the country announced reopenings. Last night, MGM announced that they would provide testing for employees in Las Vegas and that it was reopening its casinos in Mississippi over the next 2 weeks. National Oil Well Varco had the second biggest gain, coming in at 7.97% in regular trading hours due to oil prices climbing in anticipation of them announcing the suspension of their quarterly dividend. Their CEO said, quote, "While NOV's balance sheet and access to capital remain strong, the global economic shutdown has resulted in heightened uncertainty and an opaque outlook for the oilfield service industry. Thus, we feel that it is prudent to preserve the $77 million per year of cash flow from the dividend while we navigate through present market challenges to reduce costs, improve efficiencies, and position the company for the eventual market recovery." The biggest loser in the S&P today was Becton, Dickinson and Company. BDX is an American medical technology company that manufactures and sells medical devices and instrument systems. This downfall came off news that BDX will be launching a $3 billion capital raise by offering $1.5 billion of common stock and $1.5 billion of depositary shares. The other loser was clothing and fashion retailer Nordstrom. Nordstrom fell 4.13% due to them announcing that it's closing its 3 stores that operate under the Jeffrey brand name, which offers cutting-edge luxury fashion compared to Nordstrom's broader product mix. Earlier this month, Nordstrom announced that they would be closing 16 stores. Nordstrom is also restructuring its regions, support roles, and corporate organization for greater speed and flexibility. Getting into earnings, we start with Target, ticker symbol TGT, which is the popular superstore retailer. Target beat GAAP EPS estimates by 10 cents, coming in with an EPS of 56 cents. Note that they had an EPS of $1.53 in the same quarter last year. Though, Target beat on revenue. Target had revenue of $19.62 billion, which beat estimates by $580 million, and represented yearly revenue growth of 11.3%. Comparable store sales grew 10.8% versus an expected increase of 7.5%. Also note that online sales more than doubled year over year. Target shares were down in regular hours due to their earnings report, but rose slightly during after hours. Next, we have Expedia, ticker symbol EXPE, which is an online travel agency. Expedia had a GAAP EPS loss of $9.24, which missed estimates by $7.10. Note that for non-GAAP EPS, they only missed estimates by 46 cents. Revenue came in at $2.2 billion, which was a decline in revenue of 15.7% year over year. This beat estimates by $60 million. Investors took highly to these numbers as Expedia was up over 4% in regular hours trading and another 3.5% during after hours. Finally, we have L Brands, ticker symbol LB, which is an American fashion retailer that owns brands such as Victoria's Secret and Bath & Body Works. L Brands was down more than 2% today after they missed on both revenue and EPS. GAAP EPS came in at a loss of $1.07, missing estimates by 34 cents. Revenue missed by $70 million as the final number was $1.65 billion, representing a decline in revenue of 37.3% year over year. L Brands reported that its overall comparable sales were up 4%. Its Bath & Body Works stores saw comparable sales increase 41%, while Victoria's Secret sales fell 13%. That is all I have for today. Currently, futures are in the green. Thanks for watching. I will see you again tomorrow.